The following program is brought to you by the Midas Gold Group.
This is the Gold Standard from Midas Gold Group with Kenneth Russo. Hello, I'm Dave Dino. Welcome to the Gold Standard. This is your source for secure investment opinion and information on the advantages of purchasing and owning precious metals. Whether you're a novice investor or an experienced collector, this is the program that gives you a realistic weekly perspective on the state of the economy, reliable information about using precious metals such as gold, silver, and platinum to safeguard your wealth, and remarkable details about specific precious metal coins and bullion. Ken Russo is a senior vice president at Midas Gold Group. His peers characterize him as a straight shooter who will work harder for you than anyone else. Ken, always good to be with you. Welcome.
Yes, good morning, Dave. The financial markets continue to go round and round.
Yes, they do, and that's what we really want to talk about today. Our topic is warning signs, and we're going to look at what's being said about the economy and investments by various financial advisors and experts, people who make their living working with money. And even though a lot of what we're going to see is bad news, we're also going to have some good news at the end of our time together. But let's begin by just looking sort of at the lay of the land. This is a very interesting day financially, isn't it?
It is. Oil is now 85 a barrel. We'll see how it, plays out the rest of the week. Stocks have started the week down pretty significantly. And a lot of stocks, Dave, even on the NASDAQ, we've talked for a few months now. Most of the NASDAQ stocks are down 50% if you look closely. And the indexes are just being held up. It is indexed and being held up by some of the highest weighted companies, kind of like we've talked about before. It's a little skewed, but it's cracking. So we'll have to see how this continues.
You sent me an article earlier in the week, and I thought it would be good for you to comment a little bit on what was in that article.
Yeah, it talks about office space. And don't forget, the economy has been about 2 years into this pandemic, flu, whatever you want to call it. And a lot of people are no longer working at the office. They're working at home. But what's pretty amazing is that corporate office space was still vacant, and it was still down by 60% on average from pre-pandemic levels of February 2020. I mean, 72% in areas like San Francisco.
Wow.
42% empty, Dave, in areas like Austin, Texas. Now, we talked about debt in the past and bankruptcies and debt and all of this going bad. Now, when the debt goes bad, don't forget the assets that back this debt, like these office buildings, also go bad. So, at some point, people are going to return to the office, but I don't think it's going to be anywhere near what we were seeing 2 or 3 years ago. This is a very, very, very alarming situation. So we'll have to see how this plays out, but I don't see this playing out as good at all. And how do you protect yourself and diversify? And that's where physical gold has always come in.
You're listening to the Gold Standard with Ken Russo from Midas Gold Group, and today our topic is warning signs. We've been talking about a few of them, but let's begin with a warning sign from a person that everybody knows, Warren Buffett. He has a market gauge that sounds an alarm on U.S. stocks, signaling a crash that may be coming.
Well, a crash will eventually come. I mean, don't forget, from 2010 to 2020, it was the largest stock market rally in the history of the stock market.
Mm-hmm.
Sometimes you have to protect your gains. And a lot of that was leveraged. A lot of that is coming from other countries. A lot of other countries own stakes in United States equities and in stocks. It's based on leverage and free money. And then we had the pandemic and even more leverage and more free money and more central bank intervention. So are the stock markets overvalued? Yeah. I mean, and like I said, we've already seen a lot of these NASDAQ stocks cut 50% over the last couple of months. So, the warning signs were there. Will we eventually have a stock market crash? I think we'll eventually have a financial system collapse. So, yes, eventually, Dave, but we don't know when that's going to come. But how do you protect yourself and not lose it all when that happens? That's
Mi-
the question.
Michael Burry, the investor of the Big Short fame, he warned last year that the stock market was, in his words, dancing on a knife's edge, and again in his words, that the mother of all crashes was coming.
Yeah, and let's remember, nobody has a crystal ball, but people do have long track records. And he was right back, in the subprime crisis back in 2006, 2007, but he was about a year and a half, 2 years early. So he withstood a lot of pain in his portfolio before his stuff actually started to play out and he started to make a lot of money on the falling real estate prices and the debt crisis and that sort of thing. So, like I said, I have no doubt that the debt markets and the stock market and the financial system is going to take a huge blow sometime over the next few years. It has to. So the question is how do you not lose it all when that happens? And that's where diversification and gold comes into play. And that's why it's so important that people realize that you can't bet it all of the time on the riskiest assets.
One more warning sign, since that's what we're talking about. GMO co-founder Jeremy Grantham, he has diagnosed a fully fledged epic bubble that he expects to burst spectacularly. Ken, I know that you're not an anti-stock market person. You have said many times that you commend those who have been able to grow their investments on Wall Street. But I've also heard you say that it is, and you just echoed that a moment ago, it is critical to know that when you reap your gains and protect them, it's critical to know when to do that by moving them over to the stability and the value of gold.
Yeah, well, think about when a market gets stretched so far in one direction. It's only a matter of time before it snaps back and, goes the opposite way and snaps way back in the opposite direction. So it's only natural that that happens. Now, we haven't seen big moves in the gold market over the last year, but I think for sure the price of gold will definitely reflect everything that's happened after a big 2019 and 2020 in the gold market. So there's still plenty of time to own gold. But when you're talking about these other markets, when they are so stretched and so leveraged and so pumped up by free, money, stimulus, and central banking system, it's only a matter of time before that bubble bursts. We are in an inflate and burst sort of market and economy. And unfortunately, I think we've just gone through the period of inflation and inflating that bubble. And I think we're going to go through a period now of deflating and pricking that asset bubble. So people really need to be careful. Like I said, how do you protect yourself? It's a central banking environment where they just rely on huge money printing. They're addicted to money printing money out of thin air. It's a sinister plan. It's a sinister ride, and it's going to end very badly. It's a roller coaster, and not everybody should be investing all of their money on a roller coaster. That's the point. So how do you diversify yourself? That's what we're talking about.
Even those who have been promoters of bonds as safe havens, they're even warning that we are on the verge of a real recession. So we have warning signs from a variety of financial experts that relate to traditional forms of investing, warnings that all see a strong drop in the value of those investments. But we don't want to dwell only on the bad news, because later in our time together today, we are going to share some good news as well, as we talk about warning signs and why it's important to be aware of them and what you can do about them. In a few moments, we'll take a look at a specific gold product that you can add to secure your wealth. That'll be coming up right after this.
Sebastian Gorka here. The Biden-Harris administration is governing through an unprecedented number of executive orders. We have a good idea of what their agenda means for the country and for your finances. More debt, more regulations, slower growth, and higher taxes. There's even talk of a digital wallet currency and a so-called Great Reset. With massive new spending programs, the Fed is printing money even faster than before. This will likely cause the dollar to fall and gold prices to rise. That's why it's never been more important to own physical gold and silver, and the dealer I trust to do business with is veteran-owned Midas Gold Group. The experts at Midas Gold can even help you convert a portion of your IRA into physical gold and silver to stabilize your portfolio against the coming storm. Call Midas Gold Group for their guide to owning bullion and coins today. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
And we're back with more of the Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino. Our topic today is warning signs. Oh, by the way, if you live in the Los Angeles or Phoenix areas, you can actually come and visit our local office and meet with us in person. We would love that. For the address and directions, just log on to our website, MidasGoldGroup.com. That's Midas, M-I-D-A-S, MidasGoldGroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD. 855-322-GOLD. By the numbers, that's 855-322-4653. Now, let's treat ourselves by looking at a specific gold product, and today it is the 1-ounce Credit Suisse Gold Bar. Ken, we normally feature gold coins, which are backed by various governments, but there's something different about owning and holding a pure gold bar, isn't there?
Yeah, I mean, and remember, tangible gold, if you don't hold it, you don't own it. We're not talking paper gold, and we're not talking about shares in a mining company. And why gold? Well, I mean, the Fed printed $8 trillion of new money since 2000. There's almost 30 trillion of debt for the government. Actually, romaine lettuce, I read a little article last week. Romaine lettuce is up 61% over the last year. So these are the things that we have to protect ourselves about with, and from. And the Credit Suisse Gold Bar, it's actually my favorite bar, Dave, when it comes to gold bars, because I love the way that it's in a white container, and then just the gold bar just pops out the color. But it's a high standard product for sure. About 70 to 80% of the best gold in the world when it comes to bars comes from Switzerland. So, Switzerland takes a lot of pride in their gold. It's 24 karat gold, 9999 pure, and it's from the world-renowned Credit Suisse Bank of Switzerland. And like I said, it's an excellent and efficient way to own quality gold. Buyers of this bar, Dave, could be rest assured that their investments are fully guaranteed by the quality and the reputation of the Credit Suisse Bank of Switzerland. And like I said, very high quality products come from one little area of Switzerland. And that's why a couple of years back when COVID first started, a lot of this area was shut down and a lot of these bars became unavailable. But they are available right now. The most common bar size for the Credit Suisse Gold Bar is 1 ounce, although it comes in different sizes, Dave, but 1 ounce is the most common.
Ken, as you hold one there, can you maybe give us a word picture of what it looks like?
Yeah, real clean, Dave. It's a very unique white surrounding. They call that an assay packaging or an assay card. And then the Credit Suisse Bar is, even though it's kind of plain, it's just very unique, very high quality. It's real classy. All the bars produced by Credit Suisse are stamped with the Credit Suisse logo. It has the weight and the fineness of the bar on it with the assay mark. It has a unique serial number, so if you actually wanted to look up your serial numbers, or, you could. The reverse side of these bars features an attractive design where the Credit Suisse logo is repeated, and it's kind of like in a diagonal pattern. So like I said, it's plain, but it's real clean. And the gold, for some reason, just pops out real nice against the background of this. it's a great product, and clients could have the peace of mind that it's probably one of the highest quality bars for gold that's on the market.
You're listening to The Gold Standard with Ken Russo from Midas Gold Group. Today our topic is warning signs. Ken, the Credit Suisse Gold 1-ounce bars, are they IRA eligible?
Yeah, absolutely, Dave. High quality IRA eligible bar, and like I said, different sizes as well. But we really think that people should take some cash reserves out of the bank or some cash reserves out of the markets, money markets, and move them sideways and convert them into some gold IRA accounts, old 401ks. This is a great product to own, but a variety is always recommended. Different sizes is always recommended. But when you talk about a gold bar, Credit Suisse has to be at the top of the list, Dave.
Thank you, Ken. My friends, you're listening to The Gold Standard with Ken Russo from Midas Gold Group, and today our topic is warning signs, and we'll continue in just a moment.
I'm here with Midas Gold Group's senior trader and Marine Corps veteran, James Clark. James, why are people investing in gold and silver?
Well, Dr. Gorka, the Federal Reserve supplies money to pay for congressional spending. As Congress expands spending, the Fed has no choice but to keep printing money at an accelerated rate. This causes the dollar to fall and gold to increase.
So as the Fed and Congress devalue the dollar, what can people do?
As the nation's #1 veteran-owned precious metals dealer, we offer diversification strategies in the form of precious metals. As Congress looks to the Fed for more money, investors look to gold and silver to protect their nest egg.
And I recommend that you look to Midas Gold Group for all your precious metal needs. Call Midas Gold Group for their guide to owning bullion and coins today. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
We continue now with The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino. If you live in the Los Angeles or Phoenix area, come and visit us at our local office to meet with us in person. We encourage you to do so. For the address and the directions, just log on to our website, MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD, and by the numbers 855-322-4653. We're talking with Ken Russo, Senior Vice President at Midas Gold Group, and on today's program, our topic is warning signs. And Ken, we have talked about, well, just a fraction of warnings about the volatility and the insecurity of the economy. It seems that every day a qualified authority is giving us data we cannot afford to ignore. But let's look at the other side of the coin, you might say, for a moment. Let's look at the security that we can have by investing in precious metals. And I know that people say, oh, sure, Ken is a gold dealer. Of course, he's going to recommend his product. But there's a reason, isn't there, why you decided to work with precious metals? Can you tell us why you chose this path?
Well, I believe in wealth preservation, Dave. I believe in diversification. And I do believe in opportunity. And I do believe in the markets if you understand them. But I just don't believe in the central bank system at all. I think it's very important that people realize that throughout history, people have survived by having some of their money outside of the banking system. I wanted to offer people the opportunity to learn how to get some of their money outside of the banking system legally in physical gold.
Let's talk about the security then of owning gold. You've touched on this. What makes it such a wise way, compared to so many other opportunities, to protect the savings and investments that we have accumulated to this point in our life?
Well, we can touch it and hold it. We can store it ourselves, and that's important. It's precious. It's always had value. It's been money for 3,000 years. There's only a limited amount of it. You could only pull so much out of the ground at a time and refine only so much. Many people don't even realize that all of the gold that's ever been pulled out of the ground is only about $10 trillion or so. And we've printed that in the last couple years, Wow. So, basically all of the money they've printed in the last couple years, they could have bought all the gold that's ever been pulled out of the ground. So it's always held its value. It's always kept your purchasing power. And I would just say that it should be a significant part of every diversified portfolio for wealth preservation. You can't risk and gamble every single penny that you have all the time and expect to financially survive. Some of it has to be put aside. It'll be there when you need it or when your family needs it. And gold, Dave, has always satisfied that desire.
And the process of moving cash savings or funds from other investments. How do you guide us? How do you guide us through a process that many of us have little or no knowledge of?
Well, I mean, that's what we do, Dave. If my car breaks, I got to go down to the mechanic and he's got to walk me through the process of what I need to do to get the car fixed. Or, that's just what we do. We have a lot of experience with gold and a lot of experience with the precious metal markets. We have vaults all over the country. We've made it a point to become experts in gold and in precious metals. Now, we're not experts in everything. We're definitely not financial advisors. We're not financial planners. But when it comes to people wanting to be educated about gold and wealth preservation through gold and silver and platinum and the other precious metals, and how do I have a gold IRA and move some of my retirement accounts into physical precious metals? Well, that's what we know. That's our job, and that's what we make a living on. So we're very proud of that, and we work very hard for our clients, Dave.
Ken, to finish off our time together, let's get back to the bottom line of today's subject. Can you give us maybe a final quick word of warning?
Yeah, the warning signs are there. I don't know if this is the final drop before we crash. I don't know if the top has been made yet, but it doesn't matter. It doesn't matter to our clients. It doesn't matter to me, and it doesn't matter to the goal of financial diversification and wealth preservation. We have so much debt, so much enormous debt, Dave. We're talking about hundreds of trillions of dollars, maybe in the quadrillions of dollars of financial derivatives. There has to be so much out there that some people just don't understand, and they have no idea how it's going to play out. Like I said, the bubble is inflated, the rubber band is stretched extremely far, and it's mostly due towards debt and free money, helicopter money, and the whole world is doing it. It's a very, very, very dangerous financial system. And we're dealing with money that's backed by nothing, fiat paper money. I'm begging and I'm pleading with people. Do not wrap up all of your assets in paper. It's all great when it's working, but when that time comes, and it will come, you're going to want to have financial diversification through the ownership of gold and silver and other precious metals. And we would love to educate and inform the public on how to do that. Give us a call, and Midas Gold Group would love to have a chance to compete for the opportunity to be your gold dealer.
Ken, you really have given us a lot to think about and to act upon today. Good reasons to call, as you say, Midas Gold Group, to explore moving a portion of a person's wealth as a means of preservation and as a hedge against inflation. And I've got to say again, personally, I am thankful to you for your advice and your help in putting a part of my family's wealth into gold. So thank you for that. That's going to bring us to the end of our time together today here on the Gold Standard with Ken Russo from Midas Gold Group. A reminder, opinions given here are not intended to be specific to your investment strategy, but rather general information to give you a better understanding of investing in precious metals. For answers to your questions, call Midas Gold Group at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. And the website is MidasGoldGroup.com, MIDAS, MidasGoldGroup.com. This is something I'm always happy to remind you of. The Midas Gold Group is proud to be America's #1 veteran-owned gold dealer, supporting veterans' causes with a portion of profits donated to the Wounded Warriors Project and the Semper Fi Fund. So your investment in your future is also an investment in the future of those who have bravely served the cause of freedom. Again, the number to call to speak directly with Midas Gold Group is 855-322-GOLD. I hope you will write that down and call them, 855 888-322-GOLD. Ken, thank you again for your very valuable time today.
Yeah, Dave, it's about a hedge, inflation, protection, purchasing power. I enjoyed talking to you. Have yourself a great day.
Thank you. You make it better. I'm Dave Dino. Come and join us again next week at this same time for another edition of The Gold Standard.
The Gold Standard was brought to you by the Midas Gold Group.